Welcome back. Shares of Oracle are trading lower in the pre-market after the database software company reported quarterly results that fell short of analyst expectations. Oracle also issued a forecast that has been greeted with disappointment by the market. Investors had earlier boosted Oracle stock to record highs in recent weeks on enthusiasm for the company's growing cloud-based business. For more on this, we're joined now by Brent Thill. He's analyst at Jefferies. Brent, thanks a lot for joining us. I'm seeing that quarterly revenue was in line with estimates, but disappointed investors who have boosted the stock to record highs on enthusiasm for the company's growing cloud business. How would you frame up these results and the market reaction?
Yeah, the results were in line. Obviously, with the stock up 80% year to date, you need more than in line to keep the stock going. So I think the fundamentals are fine. You just didn't have the element of upside surprise that we've seen in the last couple of quarters. In Q4 and Q1, they blew through the backlog number. This quarter, the backlog was high 40%. That decelerated. You effectively had margins in line and revenue in line inside their guidance range. So there's just, again, it wasn't a miss and it wasn't a big beat. It was just like a giant blah quarter and not a lot of excitement on what's been happening. I think the other big topic that everyone is talking about is Oracle signed a bunch of these big contracts for their data centers. A lot of these data centers aren't even built, aren't even ready to take on these workloads for AI. So I think there's some skepticism among investors that is this backlog going to convert to revenue? And right now, everyone's scrambling to build data centers to support AI, support the next generation of this tectonic shift. And the real question is, can they build this infrastructure quick enough to support it? Because if they can't, customers will leave and go somewhere else, even though they've signed a contract with Oracle, if they can't provision the services to get on. And so that's something that right now, I think many are keeping a close eye on. But overall, as we've said, this isn't Amazon, this isn't Google, this isn't Meta, this isn't Microsoft. This is a story that is benefiting not at the same magnitude of the other leaders in tech or public cloud. They're doing well, but they are in many ways benefiting just because the tide's rising and that no one can keep up with the demand. And Microsoft has said this, their demand constraint. NVIDIA has said this in terms of supply constraint. They have plenty of demand, they just can't supply enough. So we've got a supply constraint. And so the question is, demand's exceeding supply, and is this just a benefit of what's going on in the market, or is this something Oracle specific? And I think that's the other big questions investors are trying to ask. And when you look at what's happening, again, across the other vendors, we prefer Amazon and Microsoft over Oracle.
I'm looking at your notes, and you indicate you actually liked the guidance. So do you take a different view of the guidance than the market is taking?
I think that it makes sense. The first half of the year is usually seasonally soft. The second half is usually seasonally stronger. So the guide makes sense. I like the guide. I think it makes sense. Having covered software for over 2 decades, you typically see a stronger back half than front half. You see some seasonality. And again, they had such a strong Q4, and a lot of that spilled into Q1. As we say, even rock stars have to sleep, right? I mean, there was such a rock star quarter in Q4 and Q1 that they had. There was no way that they could keep it up in Q2. So I think part of this is just, they're on the right trajectory, but there's going to be little pit stops along the way. So we think the trajectory's right. And again, remember, their long-term guidance is calling for them to get into mid-teen growth. Right now, they're at high single-digit growth. Wall Street loves an accelerating growth story. So growth at Oracle will continue to accelerate if you believe their guidance. And so, again, that's why we say, not their best Q2 ever, but it doesn't really matter if the journey is, hey, we're on the right long-term journey. So again, the stock got a little ahead of itself. It'll give a little bit up, but I think investors will come back to it.
You also say in your notes that you liked the fact that CapEx ramped up finally, in your words, to about $4 billion US in the quarter just reported. That was close to double what it was one quarter earlier. Why is that a positive?
Yeah, usually CapEx isn't a positive. In this situation, it is because we're in a CapEx war. Oracle's going to spend about $15 billion next year. Put that in context, Amazon and Microsoft are going to spend $80 billion. You've got to spend money to make money. You've got to spend to build these data centers to support infrastructure. Oracle was lagging behind. So, in this situation, when you're up against all your tech giants that are spending to build this infrastructure, you want to see them spending money. I mean, Oracle is a company that has one of the highest operating margins and best cash flow in the industry. You don't want that going back into their stock or somewhere else. You want it going back into what's going to fuel the next leg of growth, and that's these data centers, and then the software that runs them. So that's important to see. And again, it's a CapEx war against everyone across Google, Meta, Amazon, Microsoft. They're all spending way more money, and so they got to play catch up.